Good morning, folks. I thought I would make a video, my first video in a little while. So I have 4 pairs on watch. Just to say, if you're watching on YouTube or on TradingView, I have actually placed several trades since my last video, which was quite some time ago. I am actually now consistently profitable, and I am slowly but surely scaling up on the in-house fund within the Falcon community. I didn't bring you those trades because I've been very, very busy, and even making this video today is a bit of a stretch. But nonetheless, I will, where I can, try and make these videos. Yesterday, I made a congratulatory video for a musician friend of mine that I'm promoting, and it made me realize how much I actually miss making content and how much it does for me emotionally to do that sort of thing. So I'm going to try and do these again where and when I can. But let's break down these pairs. So I have 4 pairs on watch today, and those are Euro Kiwi, Pound Dollar, Aussie Dollar, and Pound Aussie. Of course, it is Easter Friday, and it is a bank holiday everywhere except the United States. So that will affect undoubtedly the liquidity, but nonetheless, there may still be opportunities to be had. So I'm going to zoom out to Euro Kiwi. I'm going to try and keep these videos a little bit shorter. So quite simply, we have this double top area there. Okay, we have what is potentially the start of a evening star formation. So we have the bullish push up, star. You can see we're pushing down now. Of course, this isn't closed. As we zoom in, you can see the impulse correction continuations. I like the fact that we have a gap here, a near miss to this low, and another near miss there, technically to that low. These often get taken out, especially if we're in a run of momentum followed by corrections afterwards. Now we can start to see the structure. Bit of a strange sequence to start with, but this is Euro Kiwi. It does move that way sometimes. As we zoom in, we can start to see the structure. So there was actually a trade that I missed up here. I'm not going to break that down for you, but I will be documenting that over the weekend, and the reason why I missed it as well. Now, one thing I know about Euro Kiwi, I'm not an expert on pair characteristics as such. One thing I do know about Euro Kiwi is it's famous for expanding patterns. So by expanding patterns, I mean patterns that have lower lows and higher highs within a structure. It then completes the structure, and then it goes like that. Okay, it carries on its merry way. That is a characteristic of Euro Kiwi in particular. It would be better if this had a bit of a middle section here. We don't really have a middle section as such, but that's not necessarily vital. Okay, so I also like the fact that we're retesting the back of this low. So people who got short here, a lot of people are trading support and resistance. So if they believe this is resistance now, where are they likely to have their stops? Just above. Okay, people got short here, likely to have their stops there. People who got short here, likely to have their stops here. So there could be a zone of orders in this area, especially if we retest the back end of that. So what I'll be looking for is the following on this pair. I'm being a bit dazzled by the spotlights I've got on at the minute. What I'll be looking for. So I can see this structure. Just to zoom out. I can't see this structure on the daily chart, the one we're ranging within, but I can see the highs and lows on the 4-hour chart. So therefore, that makes this a 4-hour structure. So what I'll be looking for, my rules according to when we have, just doing here, right? My rules according to when we have a 4-hour structure are a corrective. If we get a corrective tap into the area of value, I'll be looking for a 4-hour rejection or 2 1-hour rejections, okay? Or if we don't get that for whatever reasons, or we get here very impulsively, just in one big candle or whatever, I'll be waiting for a push down followed by a flag, and then I'll look to get short. And my target would be, so I'll be able to manage it down to here. I'll be setting a take profit there in that area at the 90% area, whilst trailing my stops at the same time, okay? And I won't be holding this over the weekend. I'm not holding any pairs over the weekend at the minute, just because of the fundamentals, the tariffs, etc. So that is Euro Kiwi. So moving on. So pound dollar. I'm thinking we might be more likely to get a trade on this, even though we're further away, just because we still have the liquidity from the New York session. Obviously, the dollar is a New York session pair. So on this one, we've tapped into that area here, and we have these impulse correction continuations. You can see it even on the weekly chart. You can see what was a bit of a trap here. People tried to get short, they get washed out. Okay, we had this high test here. People try to get short, they get washed out. And now what we seem to be, what I like about this, a bit of a strange sequence, but we seem to be correcting just above here. And as I just said a minute ago, if people believe on the flip side that this is now support, okay, the people who got long here, where are many of them likely to have their stops? In this general area here. If many of them have moved to break even now, their stops are likely to be in this area. Okay, so, and what happens as we drill down to the 4 hour, we can see the structure. I can see the highs and lows. So once again, this makes this a 4 hour structure. And once again, there could be a zone of orders in this general area because of this and these lows here. So as we drill down, we can see this looks like a bit of a middle section. As I said, these things are not vital, but they do add confluence, they do add weight to the trade. Okay, notice we never broke the low, we don't necessarily need to, but the fact that we've moved up correctively is suggesting to me that we'll likely break below here if we do come back down, because when we only tapped into it, we moved up correctively, suggesting that this is people trying to buy this, whilst the orders that are being placed in this area and which are still in this area are dragging price down. So because this, of all things considered, and because this is a 4 hour structure, I personally don't think this will be ready by the end of the day. I've just left it on watch because I had it on my forecast last night, because I added it to my forecast. Same thing again, but on the flip side, I'll be waiting for a tap into this area. If we get that, I'll be looking for the 4 hour risk entry or 2 1 hour rejections. If we get here very impulsively, then I'll be waiting for the push up, followed by the flag, and then I'll be able to manage it up to these highs. Of course, when I did my forecast, price was about here, hence why I've got these ending here. And I would actually set a take profit here if I could get a 5-to-1 risk to reward, which is my minimum. And if I couldn't, then I would set the take profit at that high there, or 90% of that range, whichever is the more appropriate. So that is pound dollar, Aussie dollar. Slightly different on Aussie dollar. Okay, so if we just zoom out, so you can see that one of the reasons this is lower down on my list is because we have washed out a significant low there, which we near missed to. Okay, and we've done so very impulsively. So in the long term, we could be seeing an impulse correction continuation to push higher, to potentially tap into this correction or start moving into these highs here. Again, we don't need to know what's going to happen next to make money. But that doesn't mean to say we can't capitalize on a slightly shorter term move in the meantime, okay? So although we have all that momentum, what we also have is we have gaps. Even on the weekly, we can see we near missed to this area. When we have these near misses, it implies that there's likely volume at the area that we near missed to. If there's likely volume there, it means we may respond. So we've gapped twice. Near miss, price comes up. Again, if people are selling here, there may be a zone. Where are they likely to put their stop losses? Likely in that area. If people sold here and it didn't fully commit, if it is going to go to the downside, there's likely more orders in this area again, okay? Look at this last daily close. But when you get a bullish candle like this with a massive wick below it, that implies that we're going to get push higher. Now, either we're going to push higher to continue the higher time frame direction. So we push above here and we get something like that. We correct above this, retest the back of it maybe, and then go. That would make sense in terms of this impulse correction continuation, especially when we've washed out all these lows. Okay, however, that doesn't mean to say that we, especially as we have this kind of reversal structure forming, which seems to have failed. Okay, so we didn't respond from here. Look how we responded from here, even though this is a reversal structure into this high. Look how we've responded. Okay, look at this 4 hour candle here is a clue to me that there was not enough liquidity here for this reversal structure to send price to the downside, and that maybe we're pushing up to here. Okay, and the fact that I've just amended my forecast on this because when we start to build volume like this, previously I was looking for a tap into this area and a push down. When we start to build volume below what I believe could be an area of value for a sell, it's usually the case that we will break above before breaking back in, okay, to complete this, okay, to complete this move here, this impulse correction continuation. That kind of lines up mathematically. So what I'm going to be looking for from this pair today is the following. I'm looking for a break above. I'm looking for a break above the area of value that I just showed you on the, where is it? There it is. That we keep near missing to. Okay, and that we've near missed to again here several times. Looking for a break above, break back below this area of interest as I've got it marked, and then I'll be able to manage it down to these lows, lower this structure of something in the region of 3.5, and then my take profit will be here where we had a sharp move. Okay, sharp moves imply volume. Okay, because what we could do is we could near miss to that area. Okay, we could get something like that. Then this whole thing becomes a ball structure. Okay, which gives us that, which would make sense, because if we zoom out, we can see that we are still potentially in a run of continuation to the upside. Okay, so that is where once again I would set the take profit at 90% of this range. Okay, and then trail my stop accordingly. So we'll see if that shapes up. If it does, it may be next week after the Easter period. We shall see. Okay, last up, pound Aussie. So one of the things I don't like about this is this correction is getting wider and wider. However, it's important to zoom out. Okay, so we do have, I wouldn't say a significant area there, but we have a little inflection point there. But what we do have is we have a 1, 2, 3 with the middle section. Okay, we have a 1, 2, 3 last leg. And what I like about this is that we have this very, very bearish weekly retrace there, which has retraced a significant proportion of the previous candle. When you get these and a massive wick above, that is a very strong sign that we're going to move to the downside. However, people think that it's going to move to the downside straight away, which is just not how the market works. Okay, just checking my mixer is still on. So you can see that we have gap to the area, but we have strong follow through on the daily. I like this candle here as well, another washout candle that looks like it's retested the previous consolidation. If we just separate the structures, this is where pattern separation helps a bit. Things that we're taught within the Falcon community. One of the things that gives us a little bit of an edge over the market. I haven't placed any trades this week by the way, but we tapped into it, so we have the move down. We leave a footprint. We tap into the area, move to the downside. We get the consolidation. Okay, people try to get short here, but again, if people are trying to get short here and they believe that this is now resistance, they'll likely have their stops in this area. Okay, so anyone who got short here would likely get trapped in because the stops are still up there. We wash out those stops and we retest this sharp move here. Okay, where there's also likely stops in that area. We move to the downside, leave another footprint. Okay, let's get that off the chart a minute. Just checking the time. So we have this, okay? So what I like about this, now this could be an M-style pattern, okay? So what this could be is when a correction gets this wide relative to the impulse down which has preceded it, you can see it's longer now, this could just pop out to the upside and start heading up into these areas. But I'm satisfied that we've got enough structure here to work with to mitigate the chance of that happening, especially since this high is above all of these lows as well. Okay, so we also have, as well as having this 1, 2, 3, we also have an internal 1, 2, 3, and if that was to line up at the same point, I'm satisfied that if I was to execute on this position, then I would have enough confidence to take the trade. If we just zoom out again, can I see this structure on the daily? No, it's just consolidation. Can I see it on the 4-hour? Yes, I can see the structure on the 4-hour. Okay, so therefore I would be looking for the same as I was looking for on the first two pairs, which would be a corrective tap into this area, a 4-hour risk entry because it's a 4-hour structure, or 2 1-hour rejection candles, or I'd be looking for the tap in and the push back down. If we got that, I'd be able to manage it down to these lows for something in the region of 3%, 3.5%. And then what I like about this as well is that we have near miss to here, near miss to here, near miss to here. Again, when people get long in these areas, they likely have their stops below. If people got long here, likely have their stops in these areas. So there's likely a zone of orders in here that if we respond from this area and start pushing down, price will gravitate towards these stops down here. So that's where these near misses become applicable. Anyway, that is what I'm going to be looking for, folks. I've tried to keep this as short as possible, which is no mean feat for me. Regardless, have a great rest of your day, have a great weekend, and I'll see you again in the next video.